What's going on, everyone? Shalon Winter here, aka Future Sniper Beast. So, I took a loss today. And the way my numbers have been working out over the last few months, I've been averaging 70 to 75% win rate per day, daily win rate over the last few months. So, what do I do when I lose? Nothing. It's a loss. My trades, my money management plan is basically I take one trade a day. One trade. That helps my psychology, my discipline, my money management, all that good stuff. That's what I found works best for me. So in this video, I'm going to go over my trade for today. And it's important not to see me take a loss, but what's important to see is what you do after a loss, right? So what I do is I go back and look in the chart and say, what did I miss? Because my opinion is if I take a losing trade, then that means there's something either wrong with me here. Maybe I didn't see something. Maybe I read the market wrong, whatever it was, or the market's just flat out not cooperating. Usually it's the first, right? Usually it's me. So, and today, I wasn't even mad at my loss. I don't even think it was a bad loss, honestly. I did miss something though, so that is key. So if you are trading ICT concepts, and you're trying to get some nuggets, some pointers, whatever, there's one in here for you on this one, because I did miss a key level and there's a reason why. So check out the video, make sure you watch and see why. And like I said, it's just one loss. They happen. That's why you have money management. That's why you stick to your rules, have discipline, come back stronger the next day. And that's it. So let's go ahead. And if you're new here and you haven't before, hit that like button, subscribe, and make sure you keep tuning in. So, all right, let's jump to the charts now. All right, so here we are in the charts. Today, I'm doing it a little bit different than what I've been doing lately. So lately, the last few videos, I've been doing the live review where I record myself in the morning and then I show the video. I edit a little bit so I can speed up some boring parts and parts where I'm not talking. So that's what I normally do. This video that you're about to see is that, except I'm going to be talking over it because, like I said, today was a losing day. I lost my trade today. There was a reason why, and I want to make sure and point that out. Okay. So I'm going to go ahead and hit play here, and this is going to be a pretty quick one because I'm going to jump through a lot. I just want to show you my, basically my framework for the morning. Okay. So real quick, we're here on a 15-minute chart. I have this marked out. Let me move myself over a little bit here. Actually, let's go ahead and move to this side. I'm over here now. All right. So we have, you can see the time down here. It's 9:40 a.m. Okay, so we have the London highs, London lows. I marked out our sell side liquidity right here. Market was going pretty sideways overnight, right? Because we had some news today at 10 a.m. This is for September 5th. Okay, we had news 10 a.m. and it's the day before NFP as well, so can't expect too much. But I marked out here, we had these highs, pretty relative equal highs. You have some pretty smoothness down here too, some equal lows. So what did we have? We had the market drop down here, swept these lows, and kind of created this sell side liquidity here for after the open, right? So it took this low, and then now after the open, this opening bar here took this buy side liquidity up here. All right, so now we have this taken and then taken up here. Up here, what you're seeing, this shaded area, obviously you see yesterday's high, right? Now, this shaded area up here is a daily fair value gap. A fair value, brand new, fresh one that was created on the daily chart. So price could go up there. Because we ran down these here and we're taking this buy side up here, price could continue up. So what I'm looking for, and right now, as the market opens, right up until that 10 a.m. news, I'm just watching. I'm letting price draw to where it wants to draw to. This vertical line I mark here is the 7 a.m. Time. Okay, so it's just laying out 7 a.m. Now let's go ahead and jump forward here a little bit. Let's see. Now I marked out a 1 hour fair value gap just because I'm looking for areas. So that's what you do, right? When the market, what do we know? The market is drawn to liquidity and imbalances. What does that mean? Highs and lows where the liquidity rests, and then the imbalances, which is the fair value gaps, volume imbalances. That's where the market's drawn to. And then it's also going to use the new day opening gaps and new week opening gaps as magnets. So as you can see, let me pause this. I have these from August 29th up here. This is the daily chart now. This is the daily chart. So you can see this fresh daily fair value gap right here. This low, this high made this gap. And then this blue bar is where we are today during this trading session. So price, and we're bouncing. We bounced right off of this one. We hit the consequent encroachment a little bit under. Now we're going, we're going up. We could trade into this one and then continue down. That's what I'm thinking. That's my read. We could come up here. Don't have to, but I'm anticipating that price could. And if it does, then we once we hit this area, then what's going to happen is I believe we go back through here and then we continue down. All right. So I'm anticipating if we get a draw, what are we drawing to? Well, there was this 1 hour fair value gap. So I got to, see that because price could come here, stop, and then retrace back a little bit before it goes up into this gap. It doesn't have to. So I'm just kind of waiting right now. Okay. Let me fast forward a little bit. I take note of this 5-minute fair value gap that happened. All right. So still waiting. And we have the new day opening gap for this day right here. That's where the 5-minute fair value gap was created right there. Okay. So now I'm going to fast forward a little bit more. So at this point, what I'm looking at is we could be creating a 15-minute fair value gap here. A busy. Okay. That's a bearish fair value gap, which would make this a 15-minute order block. So if price does keep drawing to the long side, I'm going to wait until it reaches what it's drawing to, and then I'll anticipate price coming back down. Where could it come back down? Well, at the moment, I'm anticipating price could come back down to this 15-minute fair value gap and into this order block. But you might, if you are kind of versed in ICT concepts, you might see something right now, and that's this volume imbalance right here. Okay, so if this bar closes, we're gonna have a volume imbalance right here. This is the 15-minute chart. So that's gonna be crucial. Right on the September 4th new day opening gap, and where I had that buy side liquidity marked. I think that's where buy side, yeah, so right in that area. Okay, so let's see what plays out here. I'm watching as it goes up. Ignore some of those other markings that I have there. I was just kind of like messing with stuff and drawing stuff out. So here we go. This is the 15-minute chart. We drew up into that 1 hour fair value gap. And I marked that because I want to see how it respects this. Does it just hit this middle and close below? And does it leave this gap open? Or does it come down and start heading down? And you can see I have this volume imbalance marked. Is that enough draw? And then it comes down into this area, into this gap before it comes up into the daily fair value gap. So I'm paying attention to that because that could happen. It could come here, retrace down into here, get you like a OTE, optimal trade entry, something like that, a nice retracement into here and then go up. So I'm waiting, or it could just keep drawing up into here. If it draws up into here, I'll be looking for a short. So if it draws up into here and it closes below the consequent encroachment of this 1 hour gap, and then we get some nice displacement to the short side, then I might consider going short. But I'm not considering going short one bit until we actually have a nice draw into this area, and then I see clear displacement. Because if the 15 minutes going up in here, right, I'm looking for basically price to come back down into this area. Once it draws to wherever it's drawing. That's number one. You want to see where price is drawing to. So let's fast forward it a little bit, kind of marking some stuff out. So you can see here, I write volume imbalance, target. That didn't make sense. I had to adjust my wording there. I meant to put, oh yeah, see, I change it here. I meant to put target if there's a short entry. So this will be my target because, again, I don't go for 100, 200, 300 point runs right now. Would I love to? I would love to. Trust me. I'm not there yet. And honestly, I don't know when I'll be there. I don't know. I'm not rushing it. If I catch 35 to 50, 60 point runs, that's my bread and butter. That's all day for me. Those are the runs I'm looking for. Usually the majority of my trades are 35 to 60 point winners. That's what I go for. I think the biggest one so far I've gotten was like 70 or 80 points. And that was like, my mind was blown. But anyway, so you can see price is running up, and I mark, let's back up a little bit because I want you to make sure and see this here. Let's play. I'm right in here at the time looking to hit this. This is the daily fair value gap, this shaded area and yesterday's high. I mark this 1 minute fair value gap, and then I write out looking to hit this. Then I want it to invert this gap. I don't want it to close. I want this to hold because we haven't ran into this yet. So I want this gap to actually hold. I don't want price to close through it. And I really prefer the body to close above the consequent encroachment, the middle. And then that way it could push it up into here and then come back down and invert it. And I think I have audio here of me saying that in just a second. Let's see. I don't remember where I left the audio on the video. Here we go. Let's back it up.
I don't want it to invert this yet. I want it to respect it, come back up, make a higher high, hit this, and then this place will go down.
See, so there it is. I was explaining that on my recording. Let's see here. Let's fast forward a little bit more because we do go through it. We go up, wicked up in there. Now, I do prefer price to close up in here first and then come down, but it wicked up in there. That's fine. It wicked. Now, if we displace through, clear displacement, take this low and invert this gap, that's fine. And we create a new gap. Hey, I'll be looking to take this short. Right down here was my target. This is the low hanging fruit for me. We do have a little gap, fair value gap right here. That would be the really low hanging fruit. But in my opinion, if price ran down here, it'd just come right through. So let's see what we get here.
Now let's see if we can invert this.
I left a few audio pieces on the video.
Take this swing, close below this. Like we need nice displacement here.
As you can see, I left that audio there so you can hear what I was saying there, that I was actually saying that, even though I wrote it. So, I'm going to fast forward here in a second. I'm just trying to get this chart over here right quick. All right. Because I'm going to pull up my my chart as well, so you can see where see something that I'm going to point out. All right, so let's fast forward a little bit. It's kind of doing it. So like, okay, and we might be getting some displacement now. You see the bar, though it wicked through the middle, the consequent encroachment, and the bar closed up here in the upper quadrant of this half. So that's good. So now we're trying to push through. Let's fast forward a little bit, fast forward a little bit. So now we're looking like we might show some displacement. Okay. Not quite, but we're getting there. All right, now we're showing some displacement. We took this swing. We closed, inverted this gap. And put a little nice little cute little smiley face. Just to show it happened what I thought, what I wanted to happen. Even though I took a loss today. All right, so now I'm waiting to see if this bar closes and gives us this little fair value gap right here. We got this inverted gap. So basically, if we get this fair value gap, I'm looking to go short in here. And you have to expect price could, you don't want it to close or trade back through this gap. But because this is a pretty large inverted fair value gap, it could trade back up into this area. So you have to be okay with that. But I really don't want price to close back above the midpoint, the consequent encroachment of this inverted fair value gap. Okay, that's the key for me. I really don't want that to happen. So we got 20 seconds and we'll see if we get that gap. And then we got it, popped back up into it a little bit. Boom, I hopped in. And I initially had my stop up here. Okay, so I managed this one a little bit because I do have a large stop, which means I have to go in with smaller sizing. That's what I do. Anytime I need to take a 35, 40 point stop or larger, I go in with smaller sizing. But then I usually, I'll have a bigger target. So the profit wise, typically stays the same, the profit and loss. Not taking a bigger risk. Because I have a larger stop, I have to drop sizing. Okay, so now here we go. Like I said, I put my target here. My stop is here. Now, basically what I'm looking at, as I mentioned, I have to allow price to trade back in this area and be okay with it. So you sit back and relax. It's easy to say now for me. So I see this swing low right here. What I'm looking at is I want price. It closed just a little bit above the consequent encroachment of this 1 minute gap, which I'm okay with that. But I don't want it to close above it. And now, basically, this little pullback here will create a swing. So what I'm looking at is if price runs back below this swing, then what I want to do is I want to tighten up my stop a little bit because I have a pretty big stop. So I want to tighten it up to either the high of this inverted fair value gap or the middle. So as it's coming down, and I'm pointing that out for my video here. That's what I want to do. It's a shame this one lost. At one point I was up like 80 something ticks, but I'm not worried about that. So you'll see it pops through the low here. Thought for sure price was going to run down here. Let's see. Let me get this other chart ready to show you why it didn't. Okay, running down 91 ticks. Looks like it was up the highest part. So it took this swing. So I threw my stop down just above the midway point, the consequent encroachment of that inverted fair value gap. And because price was a little bit volatile, I went ahead and said, you know what, let me put my target at the top of this volume imbalance, just in case it decides to come down, pop it, and bounce up. So What I'm looking for is I really don't want to see price come back above this swing. And if it does, I don't want to see it close above this 1 minute fair value gap. And if it does, I don't want to see it close above the midway point of this inverted fair value gap. And if that happens, I definitely don't want to see it close above the high of it. And this is actually, this is an order block. Yeah, not really. So, but that's kind of what I'm looking at. If it closes above all this, then I want out. And because the price was pretty volatile, right? So I didn't want it. I ended up moving my stop to the high of this inverted fair value gap because I didn't want it to just wick up and then come down, because I thought that could be a possibility as well. So I'm noting I don't want to see it go above that high, that swing there. So here it's kind of looking good. Like, okay, it's just going back into the lower quadrant of this fair value gap. No problem. Cool. And what I was going to do too, I was thinking about doing, I really don't mess with my stop too much, but I was waiting for it to take this swing and run down because I was already up 90 ticks. I was waiting for this bar to close below the consequent encroachment and then take this swing. And then what I was going to do is tighten up my stop even more up here, because it should not come back into that, but never got the chance. So here you see me put my stop back up at the top there, just because I want to see price close below this consequent encroachment, but just in case it wants to wick up a little bit into it. So I wanted to put my stop there. But like I said, I knew I had a larger stop, a little bit larger of a stop than I really normally like. So as you can see right now, it's about 40 points. So that's why I'm in with fewer contracts. That way, if I do take a loss on this, then it's about the same or less than what I normally do anyways. Money management is so important. All right, so you can see there's a small volume imbalance right here I spot. So I'm like, oh, okay. Well, it might hit this volume imbalance. Another layer of defense for my trade. So now I have this 1 minute fair value gap, this inverted fair value gap, and this volume imbalance. So it could pop up into here, fill this little volume imbalance, and then run down. That's where I'm like, okay, maybe that'll happen. Maybe that's what it's reaching up for. That's the key with this. You're always looking for what's price reaching for. What's it likely to draw to? And so it hits that volume imbalance. Pops down. It still is closed inside this 1 minute gap. So I'm like, okay, we're still looking pretty good. Not bad, not bad. But at this point, what I want to see is price close back underneath this and take this swing now. So I really want to see it take this swing. All right, let me jump forward a little bit here. Jump forward. So now it's still closed inside this gap, but then we have a little pop up through the volume imbalance. Now I'm like, all right, cool. Price got its volume imbalance. Let's go now. And then it's still kind of, I'm like, okay, it can wick up. We still got 20 seconds before this bar close. Wick up towards around the middle, no problem. Hit this little low right here. Okay, cool. That's fine. All right, now let's come down and close back down here. But at this point, when it starts doing this, it's like, all right, we're going to lose. It's drawn to something up here, more than likely, because it closed in the top half of this inverted fair value gap. You know, it pretty much is at that point, the trade's over. More than likely. Very few times will it close like up here and then come down. So that was it. Now, this is the important part, okay? So I took a loss. Now what? What did I do wrong? So nowadays my discipline is good enough where I can literally not have any worry about me going, oh, let me I might jump in another trade. Don't want that loss. That's not me anymore. Okay? I don't care. I know my limits. So now I can sit here and analyze like, man, what happened? Did I do something wrong? Did I misread? Where before I would have to just shut everything down right away. Shut my charts down, shut everything down, and then in the evening come back and do that and look. Because now I'm like cooled off, you know? I took a walk. But nowadays, I don't have to do that. So I'm like, what is it? Why is it? What is it drawing to? It hit the, I guess maybe it wants to run up, higher into the daily fair value gap. Maybe, maybe it wants to go hit consequent encroachment. I didn't think. See, this is where I'm like, does it want it? There's some new day, August 29th, new day opening gap up here, right at consequent encroachment. Maybe it wants to reach up to that. I don't know. Well, long story short, it reached right up into this area, and then it ran down and ran down and ran down and did exactly what I thought, what I wanted it to do. Here's why. Let's get rid of this. Let's show you why. This is what I missed. So ICT says, keep your new day opening gaps around 5 days or so. And then note them on a notebook or have a separate chart with them, whatever. On your trading chart, about 5 days. The new week opening gaps, about 5 weeks. But the same deal. He says they'll still respect them for probably like forever. You'll still see them respect them. So here's that run up. Right here. This was my short right at this one, right here. Right here was my short. No, right here was my short. Sorry. Yeah, right here was where the price stopped, and here was my short down here. And then it ran up. It drew up, and look what it drew up to. August 15th. New day opening gap. Right there. Would you look at that? I was like, what in the world is it drawing up to? Well, I'll be... Dang. That's what it drew up to. Right there. These things are like magnets. Price was here. And it needed about 25 points or so until it got up to here, to that new day opening gap. Had I seen it, I don't know. I don't know if I would have waited to see if it drew up there or not. Because we still had... Like I said, we still had this low was taken here. It wasn't like great displacement, but it inverted this gap, took this low, left a new one, new fair value gap. I may have taken it even if I saw this. I'm not sure. I can't say or not. But I tell you what I did do. In my notebook, I sure the hell wrote this down. I said we were very close to the new day opening gap. And I put that as a lesson learned. So guess what I'm going to do next time? Let's see. Yeah, about 25 points away. So the next time I notice this, that we're this close, I'm going to remember. And I'm going to take a mental note. What happens the next time that we get this close and we get something like this happen? Because guess what else I do? I take screenshots and I review. And I do that. That's why journaling is so important. So next time something happens like this, then I'll take note. Did we do the same thing and then still come back up to it? Or did it this time just go down? Or whatever happens, whatever the situation, right? So that's what you always got to do. That's what you always have to be doing all the time. Taking notes. And you're basically creating a log for yourself of how did price react to this? How did it do that? This time it did this. This time it did that. How many times? Okay, the last 10 times this scenario happened, 8 times it did this. Okay, well, we know trading is a probabilities game, right? So nothing's certain, nothing's 100%. But if the last 8 out of 10 times something happened the same, well, the next 10 times I'm going to assume it's going to happen around 8 times, right? The probabilities. Put them in your favor. It's that simple. So, yeah, that's why I lost. I'm assuming. Like I said, I'm going to take note of this. I'm going to keep watching. Does this happen more often than not? ICT says these are magnets. Price is going to run to them. Price is going to draw to them. And this is pretty dang close, right? So we'll see. And if ICT, if you so happen to see this video, leave me a comment and let me know. But that's my assumption. My assumption is this was close enough to where this draw, this pull down right here, this down move was just a breather before it ran back up and grabbed that. So, and I mean, just look how price, I mean, this is just beautiful. Let's go to the 15-minute. Look how price just draws to these, right? I mean, it's just beautiful. This is my chart where I only have those levels on it. So, I mean, here's the morning session. I mean, you can see price just draw to right there. I mean, you can't make that up. Right there. That was the trade. And then look, it ran all the way down right to where I had my target right here. Right here. Drop down, pull back up. Look at it again. Look at it again. Right here. I mean, look at it just crawling on there. Anyways. So yeah, that's the new day opening gap. That's my assumption. So I hope you got something out of this video. Learn from your losses. Always. Learn from your losses. You know, and just have discipline. So I wanted to show a loss because I know I always show so many winners because I love, and the reason why I show so many winners is because I've worked so hard at reading the market. That's all I want to do is know how to read the market. Don't worry about your setups, your entries, all that kind of stuff. That's last. That's the easy part. Know how to read the market. If you know where price is going, you can trade it however you want, essentially. So anyways, we're coming up to 30 minutes on this video. I didn't want to keep it too long. I can go forever talking about random stuff and psychology, discipline, and all that good stuff. Because I learned through experience. Whew. Anyways, all right, so that's going to conclude this video. Hope you learned something. And I know I did. I learned something today. Every day, learn something new. At least try to, and get better each and every day. So until next time, I'll see y'all later. And as always, trade well, everybody. Take care.